and it provides a long-term option for some capital to start gradually moving in. But there's not a lot of people that are day one just raring to go the second it comes in that haven't already bought at an exchange or a broker or GBTC or MicroStrategy. Yeah, they either bought a Bitcoin proxy or they bought Bitcoin. And so the idea that there'd be just like like $10 billion wanted to flow in the first week, I think was unrealistically optimistic. And that's part of why.
The Bitcoin industry cheered when the SEC approved spot Bitcoin ETFs on January 7th. eBitcoiner was unhappy. Bitcoin fans who liked approvals criticized Lyn Alden's post. The Bitcoin ETF is Bitcoin's dullest thing, argues Post. I say yes, the ETF should be good for price and liquidity since it gives large pools of walled garden capital more Bitcoin exposure. I find Bitcoin most interesting right now because of all the little hubs popping up across the world, WETs and other technologies that allow individuals to hold their Bitcoin locally instead of in the Binance honeypot or abroad, and solutions to help them pay each other. When written by Alden. According to a Blue Collar Blue interview, most analysts thought Bitcoin would reach $50,000. Alden is angry thousands of institutional investors can buy Bitcoin. PO's price changes before clearing were expected. Many analysts have predictions for spot Bitcoin ETFs' impact on asset prices. Alden considered large price drop predictions pessimistic and significant price gain predictions hopeful. Alden was unbiased on price hikes, market manipulation, etc. Bitcoin may not be as relevant now, but the macro specialist believes it will be in the next bull market. A portion of Alden's interview on Bitcoin ETFs and institutional investors. Like this video, subscribe to the channel, and set post notifications for more. Thanks and enjoy the video.
Reasons, and I described the ETF as the most boring thing kind of in Bitcoin at the moment, which kind of caught some flack and some people were polarized in that comment. But basically,
provocative.
Yeah. So, basically the ETF providers are, a lot of this was aware, right? So it's like they're already lining up liquidity that they're going to need. There's going to be some exit from GBTC. There's going to be inflows to some combination of the others. So I had a really big range where nothing would be surprising if we had a $5,000 candle, if we had a big sell the news event. But the other kind of signal was there are so many people calling for either a God candle or a sell the news event. There was hardly anyone calling for choppy Cs, nothing particularly remarkable. And so the fact that that's what we got is kind of the pain trade, where if you were shorting it, you didn't really make money off the short. If you were hoping for crazy spicy action to the upside, you didn't really get that either. And so whatever people are not really talking about is if you had to pick one, that's normally how things go. But I didn't have high conviction that we'd have that sideways move anyway. It's more just like, for me, this quarter of any specific quarter price action is just noise to me. The other thing is that there's a lot of the capital that's just dying to come into Bitcoin has found a way, right? Instead, what this does is this normalizes the asset to some extent, and it provides a long-term option for some capital to start gradually moving in. But there's not a lot of people that are day one just raring to go the second it comes in that haven't already bought at an exchange or a broker or GBTC or MicroStrategy. Yeah, they either bought a Bitcoin proxy or they bought Bitcoin. And so the idea that there'd be just like $10 billion wanted to flow in the first week, I think was unrealistically optimistic. And that's part of why, I actually, in my research, for example, I have not been writing a ton about the ETF. I kind of waited till we're pretty close to it, talked about it. My next report's going to obviously update some of the things that have happened since then, but it's not been this giant recurring theme of mine because it's just, in my view, it's not one of the key variables, even though it is a variable among many. I think being tied into the tens of trillions of dollars of managed assets is important. I mean, there's like tens of trillions of dollars managed by RIAs or kind of big bank broker networks, and a lot of that capital literally couldn't get into Bitcoin. And so it's either stuck there because it's a retirement account or just because that's where the person wants it. And they might be open to putting 1 or 2 or 3% into Bitcoin. It just has not been an option because none of the vehicles have been kind of up to par for those types of environments. And so to the extent that they're available, that is important over a multi-year time frame. That can add billions of dollars of inflow, which has a multiplier effect, especially when Bitcoin is very tightly held as it is now. And so that is, it's not like it's a non-variable. The way I would probably put it is, and the way I put it in my research is that it doesn't really affect my view of the direction of the next 2 years, but it can add more magnitude to the upside than if these didn't exist. And so, for example, I'm doubtful that ETFs are going to drive the next bull market, but I think that as that bull market materializes, that's another ease of inflow that could make the bull market do better than it would if these ETFs did not exist. Um, and so it's money tends to chase price, ironically. So it's like I think that the next bull market probably comes from the same types of directions that the prior bull markets came from, which is, we went through this bear market, a lot of the fast money's out of Bitcoin. It's kind of gravitated towards those strong hands, people that are dollar cost averaging in, people that just, they're like listen to podcasts like this and they don't really plan on selling for the foreseeable future. They're kind of locked in. And so eventually you kind of get that really tight supply situation, and then you get better liquidity conditions. So
Mm.
I've been kind of beating the drum for a while that Bitcoin is very correlated with global liquidity metrics, more so than any other asset I track. And it's also the inverse is true. So if I look at all the things that are correlated with Bitcoin, liquidity is arguably the highest. So like when the liquidity goes up, that tends to be constructive for Bitcoin price, but then it's especially so when you've been in a bear market for a while and a lot of those loosely held coins have gravitated towards the stronger hands that are only going to come out with like a 5x increase pretty
Right.
much. And as like a starting, like basically once you breach all-time highs, when you start to get a little bit of distribution from those types of hands. And then also when you break all-time highs, that's when people in their RIAs are saying like, why aren't we in Bitcoin? The ETFs came out months ago. What are we doing? And
Yeah.
Yeah.
and so then you can get some of the inflows, and that's where I think it could add to it. It's certainly a constructive, positive variable, but for me, it's not the key catalyst, most likely.
Many people think that Bitcoin's volatility will make it harder for the asset to become widely accepted. However, the days of that huge volatility may be quickly coming to an end. According to well-known Bitcoin advocates like Michael Saylor, Bitcoin's volatility will steadily go down over the next few years as more institutional investors buy it. Join in, but keep in mind that Bitcoin will likely always be less stable than standard assets like stocks and bonds. When you get 90% of the money, it's possible that the worst is over. In fact, Real Vision CEO Powell thinks we only have 2 more cycles left before Bitcoin's volatility drops to almost nothing. Let's go back to Alden's talk.
I don't know if they specifically will, but I do think that on average, the more widely held something is, the less volatile it can be, and the more liquid it can be, right? So when Bitcoin's small enough that like FTX like rehypothecating, $1.5 billion worth of Bitcoin can really mess it up. That's that when that kind of thing can happen, it's going to move price more. Whereas if it's 5 times as widely held, if it's 10 times as widely held, um, then there's fewer entities that can play games and kind of really mess up the price. And the asset's more diffused in portfolios that are not like quote unquote crypto focused. That all get liquidated at once, basically. And so, to the extent that people have it as a slice in a portfolio and rebalance it from time to time, whether it's the ETF or other vehicles. I mean, the ETF's now the most convenient vehicle for that. But then, there's also other ways to do it. Um, that should, in theory, have a dampening effect on volatility. It doesn't mean I don't think we're going to have a big bull run and then probably a pretty big drop. But I think it could start taking the edge off in either direction because if Bitcoin's way up and it's pretty widely held at that point, that can rebalance it back down to the downside a little bit. So if you look at some of the this past bull cycle was the first one that had like a rounded top.
Yes.
Um, the other ones all had these like crazy illiquid spike
Right.
tops, and this was the first rounded top. And unfortunately, the bottom was not as benign. There still was like a big kind of collapse because partially because of the FTX thing. But I think I would assume that's the norm going forward. Of course, Bitcoin can always surprise, but I think
Yep.
that that those spikes are a sign of kind of a less mature asset, and then as it reaches bigger amounts and things like that, you should expect more of those kind of rounded type of price action unless something extreme happens to it, unless you have a sovereign debt crisis in a major country or war or things like that. It's part of why I think it's boring. I take the under on the upside, especially immediately from the ETFs, and I also take the under on the risks from the ETF. And so, and large part that's because there's already like 600,000 coins in GBTC.
Yeah.
And so we're seeing coins come out of that bucket, diffuse into some of these other buckets. They're all at most of them are at Coinbase anyway, except for the Fidelity one, and I think a couple others are at Gemini. Um, and so you're seeing a diffusion of that. I think on average we'll see a net inflow, but as Bitcoin gets more expensive, the amount of coins that can be captured in ETF, even though the dollar amount might be higher, the number of coins is still pretty hard to get a lot of coins into ETFs at this point. Bitcoin already had 15 years of distribution. Ironically, if the ETF came out back when the Winklevi wanted it to come out, I mean, they had the foresight to want it. But if it came out then, maybe there would be more concerns about a very large percentage of it being kind of held in these giant honeypots. But now it's had 15 years to get out there. It's out in the wild, so it's hard to tame at this point. So I don't really have concerns around that. Um, there's certainly concerns for people that are in those custodial environments, but I view it as less existential towards Bitcoin itself, and I'd further phrase it as um, it was inevitable. So if Bitcoin can't withstand an ETF, it didn't never really mattered to begin with.
Good point.
And so I see a lot of and to go after the Bitcoin critics here, some of them are kind of like, oh, Bitcoin had a mission and now that mission's lost because they used the ETF on it. It's like Bitcoin doesn't even know it has an ETF on it. Bitcoin is just Bitcoin. One, in this case, one country, their SEC and their court system allowed an ETF. A bunch of entities that are not affiliated with Bitcoin made ETF wrappers around it. It gives people one more buying access, one more kind of custody access, one more trading scaling scheme that's on top of it. But it's a global asset, and it's an open source network. And so I kind of view that as relatively irrelevant, other than the extent that obviously, if you do control a lot of coins, you have some power over how, like, say, hard forks turn out, for example.
Yep.
And so it's not that concentration doesn't matter at all. It's just that there's already some degree of concentration. Luckily, it's not that high, and I don't think the introduction of the ETFs really changed that. It just kind of shifts around where it is.
What did you think of Alden's interview? She said that spot Bitcoin ETFs won't have a huge effect on Bitcoin prices in the short term, but she thinks they will have a huge effect in the long term, especially during the next bull market. Alden, a macro analyst, is generally more bullish on Bitcoin in the middle term, from mid-2024 to late 2025. She thinks that global macro conditions will be much better during that time, which will have a positive effect on Bitcoin and other assets. Please share your thoughts and comments below, like this video, and subscribe to the channel and post notifications to see more videos like this. Thanks for watching.